You're watching Masters in Trading Live with Jonathan Rose.
Hey everybody, it's Jonathan. Welcome to our Tuesday edition of Masters in Trading Live. Every single day we're getting on here at 11 o'clock Eastern. We're going to go over the market, and every single day I'm committed to finding you one great trade. We call that the trade of the day. Today, I got 4 topics for you. The first one, we have a copper trade in BHP. We've talked about copper. Today, copper is pulling back a little bit. FCX is trading off. I want to go over copper because we have copper exposure. We are in the beginning, almost the heart of earnings season. So far, we've shared 3 different earnings trades with you. We're going to go over those earnings trades. The third topic, you may be looking at that third topic and thinking, oh, pop quiz, I don't do very well in quizzes. Well, the good news is this pop quiz is just for fun. This is not going to be under permanent record, but it's important. Pop quiz is our third topic, and then like we do with every one of our Masters in Trading Live, we have our trade of the day today in MGNX. So let's go over to the charts. The first topic that we are going to start off with is copper, because this morning FCX came out with earnings, and FCX is down like 1%, down a little bit, not very much. What are we looking at? Let me set the chart up. We have FCX, which is a major player in copper, Rio, which is a smaller player from Brazil, and then we have BHP. Throughout my entire career, I've been trading since 1997, been trading professionally. Throughout my entire career, I've always used some kind of way to tie down an instrument. So FCX is actually tied down to BHP. And what I mean is, if we go back, just looking at this data, you can see they're just moving together. Look at this as one big fat snake. They're just moving together, and at times they'll break apart. And when they break apart, this is what's called a divergence, when you have highly correlated names just breaking apart. Well, for those who have been following, thank you, great call, we've been talking about BHP. BHP is very inexpensive relative to FCX. That's why we like getting long BHP. Not every trade that we share is for every trader. This trade, if you took my great advice and got long BHP, I encourage you to be patient. If you are long BHP, you could consider selling FCX or buying some puts in FCX to hedge this position. I'm going to go to the next slide. And in this next slide, I remove Rio and I replace it with the price of copper. Here we go. So what do we have? We have FCX, BHP. I guess I didn't remove this. I should have. And now we have the white is copper. Okay? So the white is copper. FCX is following copper. Rio is trying to follow copper. But again, I'm showing you this because this is the correct trade. I love staying long BHP. If you're not involved, I like getting long BHP. If you are involved and if you're nervous, you may consider hedging yourself with some FCX. Oftentimes, I will tell you that the creative trader wins. We don't want to just get long copper. What I mean by the creative trader wins is, as these disconnects happen, The creative trader is going to find ways to add protection. Moving on to the next topic, and the next topic is going to be one of my favorite topics there is, because it's Groundhog Day, and who doesn't love a good Groundhog Day? What do I mean by Groundhog Day? Earnings comes around 4 times a year. We want the same approach every single earnings. So this earnings season, we have shared 3 earnings trades. We shared Lemonade, April 3rd, SYM, April 9th, and then RELY, April 11th. Let's go over each one of these trades. First trade, Lemonade, was shared April 4th. April 4th, we were looking to do the straddle. The straddle is you're buying the calls and you're buying the puts. That trade originally for $350, well, right now, that trade is still trading about $350. It's April 4th is when we got into the trade. Today is April 23rd. Earnings trades being long. The fact that you're able to hold this and it hasn't gone down at all is a very cool thing, because you just got to hold Lemonade for 22 days and hopefully play the movement. Sadly, this sucker didn't move very much, but this shows the power of buying earnings well. Buying earnings inexpensive, because they're not going to decay. They're not going down. Here's the next one. The next one is an SYM, symbiotic. Now, 57s are going to be right here. 37.5s are going to be right here. The trade was originally shared for $3. Right now, again, the trade is pretty much trading for $3. We have not yet got a big move out of SYM. We're hoping that it moves before the earnings or into the earnings, but another name, right around break even. Nothing wrong with that. RELY, strangle. The difference between a strangle and a straddle is a strangle. A straddle, you would just do the same strike. A strangle, oftentimes we'll do a strangle to get the cost down, because we can do 22.5s. And now these are trading 230 mid-market. So we have about 280 on these, up about 40 cents on Rely. I would hold this trade, holding our earnings trades. Oh no. Pencils down. Pop quiz time. Is everyone ready? Is anyone nervous? Don't be nervous. We're just having some fun. 2 companies. Company 1. The last 6 times they've released earnings. Okay. So we have 2 companies. They've released earnings the last 6 times of the last year and a half. The max move, the most this sucker has moved after earnings. It moved 20%, 35, 30, 10, 18, and 27. Very, 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 very volatile. I would say the average here is what? 26% average movement. Okay. That is very volatile after earnings season. Company 2, it doesn't move as much. 3%, 6%, a little bit of movement here, 14, 8, 12, 21. The average move from company 2, maybe about 15%. Now it's clear that this name moves more than this name, right? But that doesn't mean it's a better trade. Here's the question for you. We're going to go to the next slide. Days until expiration is 24. They're both in May. The expected move right now, the implied volatility is pricing in this amount of movement for earnings. So now I ask you, which is a better earnings trade? Is it 1 or is it 2? So which one of these is a better earnings trade? I'll give you 10 seconds along with some Jeopardy music. 10 seconds, actually. Actually, it's only going to be 3 seconds. Hopefully, you got the answer by now. Company 1 moves an absolute ton, but the market is only pricing in 16% of movement. If this name moves over 16%, you are going to be a winner. That's a great trade. This guy doesn't move nearly as much, but the market is pricing in 22% of movement. This is expensive. This one is inexpensive. Does that make sense? 16% of movement, but this sucker can really move. 22% of movement here, but it never moves that much. Your winner in the pop quiz number 1 is going to be Company 1. Company 1 is a stock or a company, ticker MGNX. Company 2 is ticker ASND. Here are the previous moves, MGNX, the last 4 earnings. And here is the implied, what they're pricing right now. ASND hasn't moved nearly as much, but the options market is pricing in quite a bit of movement now. Your trade of the day is going to be an MGNX. This one's a doozy. If I go to the options right now, MGNX. Last trade, 1593. I like these 17.5 calls and 15 puts. I'll write it out so it's super clear. Calls. And then we got puts right here. 95-cent limit bid. And then 15 puts. We could be 90-cent limit bid for a total of $1.85. $1.85 cost for 1 unit is $185. You can never lose more. And we're going to look to hold this trade for 24 days. Now, hopefully you got the pop quiz answer correct. How we do earnings is we always want to look at historical movement. It's real. It's not a double bottom or a triple top where we're speculating or guessing. How a stock has moved previously is real. Now we want to take that data and then look how it's priced in the options market right now. It is an awesome way to trade earnings, and it's exactly how we traded earnings when I was a market maker on the floor of the Chicago Board Options Exchange. The creative trader wins. Look at things from a different perspective. Trade smart. I'll be on here live tomorrow, 11 a.m. Eastern, with our trade of the day. Enjoy the day.
Join us every weekday at live.mastersintrading.com